Alright, let's analyze the market going into Thursday. This is going to be Thursday, May 28th. The previous day, Wednesday, found a rejection in premium. Okay, this is, can identify this through the rejection block. When we go on the lower time frames, we'll see what's inside of the rejection block. Okay, so and I mean, in terms of a weekly profile, right? This here leaves us with a couple opportunities, okay, such as the Wednesday high of week scenario in case price will want to come back inside of the new week opening gap. Definitely this wick here can support this idea. If not, this wick can support some kind of swing to Z, right? Expansion to consolidation. The consolidation doesn't really have to be sideways, okay? It can be some kind of consolidation that grinds higher. Right, because now this range here on the lower time frame, the range of the rejection block, wicks usually lead to high resistance price action. So even if the week is bullish, I don't think that is going to find this. Well, eventually it will, but going through the wick, right, in my opinion, won't be so simple for the market, right? I don't think it's going to displace in one shot, but rather might see retracements from it, right, and then trade higher from there. Okay, so when we go on the lower time frame, we'll see what's located at these levels. So obviously the rejection block here is the premium area of interest on the daily going inside tomorrow, and the discount area of interest, well, is the range of the BISI that the market has just created on the daily. Obviously this BISI has the new week opening gap inside of it. So far price is not showing willingness so far, right, to trade inside the NWAC. So does it need to trade into it to trade higher? It doesn't, right? But today's profile anyways will tell us a lot about that, and when we look at the lower time frames, we'll see what anticipations we can get based on the premium and discount levels on the lower time frame. Okay, so premium level of interest, the rejection block, discount level of interest, the daily BISI. Right, this is also a suspension block, right? Two volume imbalances. In the middle of it there's a fair value gap. So you could use this entire range. On the 4-hour chart, you can see that yesterday's low of day still respecting the 4-hour fair value gap. That was a level of interest coming inside of Tuesday. Obviously is related to the new week opening gap. Is this happened during the bank holiday of Monday? But most importantly, right, you can see that yesterday created a low of day right at what was the level of interest, the PD area of interest coming inside Wednesday, which was the dealing range low, right? Being the previous day's low, right? So the low of Tuesday. Price accumulated orders inside of the range, right? Range of a fair value gap, range of a mitigation block, and from there send prices higher. So coming inside Wednesday, we had a dealing range, and what I was saying was that this order block was likely going to find sensitivity, and in fact the low of day came right at 50%. Okay, so this order block is still relevant. Clearly price has shown sensitivity right here, here, okay, so if ever it were to get revisited, either like this or like this, right, you can anticipate decent trading opportunities developing around the quadrants of the order block. Okay, so this remains a good discount array, and obviously the fair value gap also. If you believe that price should trade higher, you identify a bullish profile, because again, price so far hasn't shown willingness to trade to the NWAC. So unless tomorrow will open and fail inside of the rejection block, right, I think that there is enough narrative to assume that price can continue trading higher for the rest of the week without needing to revisit the new week opening gap. There's also divergences at these levels with the S&P 500. Okay, so that's that for a 4-hour chart. And if we look at the previous daily range, at least on a 1-hour look back and look at the previous day's range, we can look at a 3-day look back range. Yesterday's profile, a New York reversal, did not have the strongest closure though. Right? In fact, this is a lower time frame reversal. We can look at, well, first of all, let's look at a 3-day look back profile. And again, level of interest in here, right? We have that 4-hour order block, this 1-hour order block, right, which cuts through the 4-hour order block. So the order block definitely still relevant. Why? Because it is the dealing range low coming inside Thursday. Right, coming inside Thursday, we have a dealing range high and a dealing range low. Okay, so right, this was the range of the 1-hour order block. You can see price found sensitivity. We looked at the 4-hour order block. Price also found sensitivity around it. Okay, so if price is around the region of this order block, right, this is where you want to have these quadrants up. So that's that for the 3-day look back range. Looking at the previous day's range, right, we can see here that New York reversal profile. We have to go here on a lower time frame chart. Price trading the most amount of orders inside of the range near discount. Okay, so this tells me that price left some kind of order block inside of the range, right? The fact that it consolidated and then from there started expanding back inside of the range. And in my opinion, the order block of interest, right, there's many to choose from at these levels. Personally, I would use the order block from, right, this final phase of accumulation that leads to a new high. Why? Well, because this here is there's a divergence at these levels with the S&P 500 at the daily lows, and also obviously at the new week opening gap. I can identify this through the profile again. I can see that the high of this order block comes right from the POC. So I would say that this 15-minute order block, okay, will be sensitive to price if it's retraced into. If price is bullish, this order block should hold price as support. If not, okay, it will be used as a bearish breaker. So this is in terms of a discount array, but right, we said that Wednesday inside of the range here left a rejection block in premium. Okay, so what's interesting is to see how does this rejection block look like on the lower time frames. Right, so here we're looking at a 1-hour chart where you can see that right, what is there here? There's a 1-hour rejection block in premium. This rejection block cuts from 50% to the high of the daily rejection block, and in the lower half of this, right, this wick, there's a 1-hour SIBI. Okay, so if price will be bearish at these levels, okay, so if tomorrow, today in terms of a trading day, Thursday, May 28th will create an open high, low close profile. In my opinion, very likely it will do so respecting, right, the lower half of the daily rejection block and also respecting this 1-hour SIBI. Because yes, there is a bullish order block in discount, but overall these are relative equal lows, and so this doesn't mean that price needs to revisit it and to trade lower. But if a open high low close profile presents itself, right, then you have a very good drawn liquidity, not only being previous day's low but also having the new week opening gap below that, right? So this 1-hour, well, first of all, we can also look on the 15-minute chart, right, because a wick on the higher time frame will be some kind of order block on the lower time frame, and right, what you can see is that upper half, the upper half of the daily rejection block, right, had this 1-hour rejection block, and on the 15 minute this looks like a bearish order block. Okay, so also this is also a valid level, right? This can be a level where price rejects or consolidates from. So we have a lot of levels in the range right now. Obviously I don't want to go inside the session and having 3-4 different quadrant of levels on my chart, because then it's too messy, right? This is how you start losing focus. So what I'm going to do, right, is based on where price is trading, right? I'm going to have the quadrants of relevance based on where we're trading at the moment. See, at the moment price is trading here. I want to have the quadrants of the hourly fair value gap up, right? Since say, when at the time that you're going to trade, price is trading at these levels, right? Then what you want to do is have the quadrants of the bearish order block in premium. Okay, or if at the time that you trade at, price is trading at these levels, right? Well, then what are you going to want to see? You're going to want to see how, right, if price comes back inside of this, right, what would now be a bearish breaker. Okay, if it revisits it, this can represent a trading opportunity. Okay, so we have overall 3 levels, right? We have one in discount, we have one at 50%, and we have one at 75%. Okay, if we grade the previous range here, right, you can see that that's exactly what's happening. At 25% we have a bullish order block, at 50% we have a fair value gap, and in premium, okay, at 75% we have a bearish order block. Now remember, these 2 order blocks can become breakers, right? So say you come inside the session, price is trading way up in premium, okay, and then we're to revisit these levels, right? In this case, the level of what is currently a bearish order block in premium of the previous range. Okay, this can offer an opportunity for price to trade higher from. Okay, so premium array at 50%, okay, so at equilibrium of the range, and discount array. For today, again, I'm not sure which one will be of interest, right? Yesterday was a bit clearer in my opinion, but also because price was trending higher, right? Whereas today we're opening inside of a dealing range. Right, so you're coming inside Tuesday, yesterday, right? Price was already trading in premium, and it wasn't really a dealing range at these levels. So that's why it was easy to identify that the level of interest was going to be the discount order block. But in this case, right, if we measure price from the dealing range low to the dealing range high, we can see that we're opening in the vicinity of 50% of the current dealing range that we're trading inside of. Okay, so it could be this one, could be the 15-minute bearish order block, could be the 15-minute bullish order block, or the array at 50%, okay, which is represented by a fair value gap. You want to see, obviously, coming inside New York, how and if, okay, these arrays how were they traded around, right? The price come to one and then started creating fair value gaps from the other. Any divergences, right, around the premium order block or the discount order block. This can be, right, a scenario that sends price higher or lower. So yeah, I think that's pretty much covered. I don't think I'm missing anything. I'm just thinking. Give me a second. We looked at the daily discount premium 4 hour. We just identified, just simply looking at order flow. And here on the 3-day look back chart, we looked at the dealing range that we're trading inside of, represented by the low of Tuesday and the previous day's high. Right, and inside of this range we identified discount arrays, okay, in the form of the 4-hour bullish order block, which represents overall the dealing range low, We have a 15-minute discount order block that is relevant to the previous day's range. We have a fair value gap. Okay, this is located of the dealing range. This is located in premium, but of the previous day's range at 50%. Okay, so overall a premium array, and at the highs, right, we have a rejection. Right here you can see the rejection block identified through a 15-minute bearish order block. Okay, so again, I wouldn't say to keep all these levels on your chart, okay, since we're looking at 3-4 of them in this case, but rather pay attention as to how price trades around them, at what time of day does it trade around them, and what's the reaction around them. Any fair value gaps created from them, any fair value gaps created through them, any divergences created around them, okay, so around the extremities of the range. And if you really want to have the quadrants up, well then, all depending on the time of day, okay, that you're going to be trading in, you can simply put them up as prices trading near the range of, you know, this or this or this. Okay, so that's it for the analysis into Thursday, and so let's see what tomorrow gives.